Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at oil, starting with the hourly, and a reminder, we've got the inventory report tomorrow, Thursday at 11 a.m. Eastern due to the shortened holiday week. But in the last video, we were highlighting the potential for the bearish reversal head and shoulders pattern on the hourly. And we ended up holding that support level, but we knew it was a key support level going forward. And again, I highlighted the lack of support here because of the strength of the move to the upside. If we broke that consolidation low of 52.06, there was room to the downside before encountering any support. So we held that level initially, saw a nice bullish move to the upside. We formed a bit of a double top, 53.47, 53.49, not a convincing bullish break. And then we were forming a little bit of a higher low pattern on the hourly. I drew that uptrend in the video yesterday. And look at that break. All out dump, breaking that uptrend support line. And in the same candlestick, breaking 52.06 support, which led to another move all the way down to 51.19. So even if you didn't get in on that first candlestick, if you were just sitting here patiently waiting for 52.06 to see if that support could hold, there was still another 95 cents to the downside once that support broke all the way down to the initial bounce, and then previous support acting as resistance. Look at the bounce attempt from oversold conditions, rejected on the back test from resistance, another dump, and lower lows. So the bears are clearly in control of the short term. The bulls really need to hold the low. I'm going to put it on the 4-hour time frame here so we can condense down and see it a bit more clearly. So this is the key support that I'm looking at, this consolidation low down at 50.69. And if we break that level, it's going to be a clear break of some pretty important support. Let's draw this trend line here as well. And again, this is the 4-hour chart. Slight uptrend on that line. I actually like that better than that line that I just drew. So I'm going to get rid of it because it's a little cluttered. But that uptrend line is doing a really good job of hitting all of these consolidation lows. 1, 2, and now 3. That's a really nice uptrend line. And I'm just seeing that now doing it live. But watching how perfectly these dips have hit that line, that is a nice line to be keeping an eye on. So it is a bullish reversal candlestick on the 4-hour chart off of this support. We will need to confirm that over the next 4-hour period, which is just beginning to form right now. And it's a very important support level to hold. So if we break 50.69, we're going to fall through this support and we're going to head down to 50 psychological. So the daily time frame for oil is still forming, and we now have all these lines here that make it a little hard to see, but it's still from our high, lower low, lower high, higher low. So if we can break now above 53, 47, and 49, that little double top, the bulls will breathe a big sigh of relief because that will resume a lot of strength on this daily time frame. But if we break that uptrend support line that I just drew and break 50.69 support, it's just another lower high and lower low, and the bears stay in control here on the daily time frame. In terms of the weekly, the bulls really want to hold $50 psychological support. We've dipped and bounced off of that level now a couple times. So I'm going to be watching that 4-hour chart like a hawk and watching to see how the inventory report reacts, because if it's a bearish reaction, we're close enough to this support that we could see a clear break, and that would be a very clear bearish signal on the longer term time frame, referring to the daily and the 4-hour charts. So watching these levels close, 52.06 back as resistance on the hourly time frame, and we'll see how that reaction to the inventory report comes in, and we'll check back in after hours. I will see you then.